So where did we stop?
We were supposed to do the November 2018 5C.
November 2018.
Yes, 5C.
Did you attempt?
Yes, I attempted it.
November 2018 question 5C, right?
5C, yes. Yes.
Let us start with that together. So there we have 1 November 2018 question 5C. So whereby you are told that Z Limited has received an order to supply 30 units of product A. So far, 14 units have been completed. The first unit required 40 direct labor hours, and a total of 240 direct labor hours have been recorded for the 14 units. Additional information number 1, the production manager expects an 8% learning effect for this type of work. 2, the company uses standard absorption costing, whereby we include even the fixed overheads. Then 3, the costs attributable to the center in which the product A is manufactured as follows: direct materials, 30 shillings per unit; direct labor; variable overheads, you can see there, and then fixed overheads. Required the learning curve index. Learning curve index, that is Roman 1. Learning curve index, which we said it is what? It is B. B is the learning curve index. How will that be? It is learning rate, log of learning rate divided by log 2.
Log 2.
Good. So let us plug the figures. We have log 0.8, that is the improvement index. Improvement index given there is 80%. Then you divide by log of 2, negative.
So negative 0.322.
Negative 0.322. That's the learning index for 2 marks, which is worthy. Nelson.
Yeah, iko sawa.
Number 2, unit cost. Unit cost. Unit cost. First of all, let me have what called the statement cost or cost statement. Cost statement. And this cost statement will comprise, for that product, will comprise direct material, of which one, that is not any problem. We can take 30 shillings per unit times how many units?
Now the units there, yeah, they're 30 units.
30 units, yes. Times 30 units. That is how much? 900.
Yeah, that's 900, yes.
That is for direct material.
Yeah.
Direct labor. Direct labor. We are paid per hour 6 shillings. Are we there?
Yes.
Times the number of hours. That is where now the learning curve effect comes in. So we must calculate that the number of hours, taking into account the learning effect, because the time taken to produce the first unit is not the same as the second, third, and fourth.
Yes.
So that will look like that. And then we have overheads, variable. We have variable overheads. Variable overheads, which we are paying 0 point, because they vary. Variable overheads, they vary according to labor hours. They vary according to labor hours. So it is 0.5 times the number of hours in respect to labor, we should work later on. Then you have fixed overheads. Fixed overheads, those ones that have been given directly, I can plug with the far end, 6,000. Now let us work the labor hours. Labor hours. I can come inside. I can work for labor hours. So time taken to produce how many units? 30.
Produce 30, yeah.
30 units would be equal to A x raised to negative, that is raised to B plus 1.
B plus 1.
B plus
Yeah.
1, because we need the total hours, not average total hours.
Yeah. Yes.
So I can have 3 plus 1, negative 0.322 plus 1, coming to
0.678.
Edwin.
0.6.
Brother Edwin, welcome on board. Edwin, say hi to me.
Hi, how are you?
Welcome. So here we are, and we are tackling this question of learning curve under that topic number 2. Good. So B plus 1, Edwin plus the other company, B plus 1 comes to
0.678.
0.678. So time taken to produce the 30 units will be equal to time taken for the first unit. We were given to be what? To produce the first unit. 40.
The first was 40 hours.
40, I can see 40. Then you multiply with 30 units, but you raise to
30 units. 0.6.
0.678. How many hours
78.
produce the 30 units so far?
I got 401.
You got
401.
71.
401 hours.
401 hours, labor hours, to produce the 30 units. At that point, now you can plug those 401 here, then here also 401. You can labor cost hours.
2406 and then 200.5.
2406, 2406, and the other one is
200.5. 200.5. Yes.
So get the total cost.
9,506. 9,506.5.
506.
506, yes, 0.5.
0.5. Good. At that point, unit cost. You take this total cost. This is the total cost now. Total cost. Then unit cost, you divide by the number of units. That is very, very direct. Together.
316.
So therefore, unit cost. $9,506.5 divided by 30. You got how many units? Sorry, the cost per unit.
316.88.
316.88.
Yes.
Perfect.
Yeah.
That is how you are gonna particular 8 months. Yes.
You have a very poor network today.
From my end.
Yes.
I'll just work on it. I'll just work on it right now.
Yeah.
Kwani klasi gani mingi?
This is advanced management accounting. Edwin.
Yes.
In MA.
Pardon?
Management accounting.
Yes.
Yes. AMA.
Yes.
Conditions do you give them for the different ratios for the different scenarios? So when we come to the issue of class,
Please mute. Mwalimu now can see the writings. Now,
Okay, Edwin and the company?
Yes, now I can see it well.
Yes. Is it
Yes.
okay now?
Yes, it's clear.
Okay. Now let's look at that another question. Nelson, I gave you 2 questions or 3.
ingine ulikuwa utume. You had said May 2015 to A.
May 2015.
Yes, to A, which I didn't have.
You have it.
No, I don't have May 2015 to A.
Can you share the question through the chat, please?
Acha nikuambie, if you have past papers, this was November 2018, 5C.
Sina past papers, Edwin. Sina.
Oh, okay. Acha kama kwa hiyo group, acha nikutokie penye zinapatikana. Na on the chat utaona link ya kwenye questions ziko. Uta download questions.
Oh, kwenye chats. Kwenye chats. Oh yeah, nimeona.
Kwa chat actually. Yeah, so hiyo link
Yes.
maswali ziko.
Oh. Umesema ni 2015.
2018 5C. November 2018.
November 2018.
Yes, 5C. Next year hapo kwa chat. This is your first time?
Just a moment. November 20.
Edwin?
Yes, the first time.
Okay.
Yes,
Yeah,
yes.
You hear regularly?
No.
Sawa.
Nelson?
Yes.
Have you accessed that?
The one
For May 2015.
umetuma WhatsApp. Sina hiyo swali.
15.
May 2015.
2015 haziko kwa nini? Haziko kwa hii document tuko nayo swali.
Question number 2, part A.
Hebu tusome.
Can be shared, eh?
Yeah?
Just a few.
Unaweza tuma hiyo swali yenyewe please kama inawezekana.
Sorry, Edwin?
Unaweza tuma hiyo swali yenyewe, I'm trying to check it, sioni.
Ujaiona ndio nimetumpa.
2015. Number 2018. Mm, 2018.
Okay, that is in transit.
Sawa.
Umeona?
Nimekuja.
Perfect.
Sawa.
Haya, wacha tugawane hiyo haraka basi. So you are told there, Jack Limited is evaluating the assembly costs of producing large LED television sets that target high-end customers in the entertainment industry. The company has just received an order for 8 new TV sets. The estimated costs are as follows. 1, direct material cost per TV, 400,000. 2, direct labor usage for the first TV set is estimated at 2,000 hours. 3, the direct labor costs amount to 300 shillings per hour. So they are paying per hour 300 bob. Number 4, indirect manufacturing costs are predicted using 2 separate cost functions, each with its own cost driver as follows. 1, equipment related indirect costs at the rate of 120 per labor hour. Another cost driver, material handling related indirect costs at the rate of 50% of direct material cost. So 50%, we call that one as overhead absorption rate. Number 5, the learning effect of 85% is expected to occur. 6, the learning index for an 85% learning curve, negative 0.235. The company charges a profit margin of 33.3% required for 6 months for free. The invoice price for the 8 television sets. Now, my good students here, you have to come up with the cost statement as we have done the other one, and then you add the desired profit markup. Because we don't have the selling price, we don't have the sales, we are working with costs. So therefore, given that last note before required, we have been given the margin, 33.3%. So you have to convert that margin into markup so that you can add as what? Your desired profit markup. You get the selling price. Good. So let's start. So we can work out our labor hours. We can work out our labor hours. So total time for 8 TVs will be equal to A, if that is the formula, A x raised to B plus 1. Total time model. We need to get the total time to manufacture these particular TV sets. So we start with D. D we have been given as negative 0.2345. So B plus 1, my good people, add B plus 1. So B plus 1 there, giving us negative 0.2345 plus 1, 0.7655, like that. Then, therefore, my total time for 8 TVs, time taken to produce the first TV, which is A. We said A denotes time taken to produce the first unit. In this case, it's TVs. Have been given in note number 2 to be 2000. So I have 2000 into how many TVs? 8 of them. Then I raise to B plus 1, 0.7655. So that one comes to be
98, 825.
825 hours. We can even round off hours.
Yes.
Those are the hours consumed to produce the 8 TV sets. Now, let us have our cost statement. Cost statement. Is my font clear?
Not that clear. Inasema NTC colleges network bandwidth is low.
Oh.
Yeah, it's clear now. I can see it well. Because how? Publish that.
Is it okay? Is it okay now, Edwin?
Yes. Yes, I can see it well. It's okay.
Okay, okay.
Yeah.
Now let us have that particular cost statement. Cost statement or statement of cost. Statement of cost. We start with the material cost. Material cost. Note number 1, you have been given the direct material cost per TV set is 4,000 or 400,000 per se.
400,000.
400,000, that is for one TV. Then I multiply with 8 TV sets. That one comes to be 3.2. That is material cost.
Yes.
3.2. Then labor cost. Labor cost. Per hour, you are paying how much?
2,000.
2,000. No, 300. Look at note number 3. The direct
Oh,
labor
yes.
cost amounts to 300 per hour.
Per hour. Yes.
So we are paying 300 per hour. So far, How many hours for that particular job?
2,000 hours.
How many hours so far?
2,000 hours.
For the whole compact.
It's 9,825 times.
The one that we have calculated here, Edwin.
Yes.
Now, 2,000 is the time taken to produce the first TV. When I produce the second TV, the third time reduces because of learning effect. Are we together, Edwin?
Yes.
Now, at the end of the day, here we calculated our time taken to produce the 8 TVs.
Yes.
So 300 per hour, I multiply with 98.25. So what would be the labor cost there? So I have 947,500. And that, adding the labor cost. Then I go to overheads. I go to overheads, my good students. Overheads. Overheads number 1 is under number 4. Hope we are following. Hope we are following.
Yes.
Overheads. Number 4, we have equipment related. Equipment related. So this equipment related, we have been told that at the rate of 120 shillings per direct labor hour. So I'll compute 120 by 9825. Are we together? That is equipment related. Overhead absorption rate is 120. And then they vary according to labor hours. So that one comes to 1,179,000. Are you following?
Yes.
My camera is not clear, but I believe you are following.
Yes.
All right. Then another overhead is what? Another overhead we have there, material handling.
%50.
Material handling. So material handling, it is what? The OOAR, overhead absorption rate is 50%. So 50%, guide me, 50% of
Direct materials,
which is what?
32 million. 3,200.
3.2. 3.2.
Yeah.
So half of that, 1.6.
Yes.
And that's 1.6. That is that. And is there another cost? No, that is it. That is it. These are the only costs. So we add, aggregate them, we get the total cost. Total production. Total production cost. Total production cost. So aggregate them, aggregate.
Mm.
Eight million 926,622.
8 million.
926.
926.
622. Yes.
926.
Then 622. Mwisho.
620.
622. 622.
That is the total production cost. Total production cost. We were told to give the invoice. You cannot give invoice based on the cost. Then nothing you are doing in the market. You need to add your profit element together.
Yes.
So let us add our profit element. And our profit element, we have been given note number 7. Note number 7, that is where we have the profit element. So here we add profit. This is profit markup. I've been given margin, and here I have the cost. I need to convert margin to markup. Are you able to convert margin to markup? I've given the margin 33%. Management accountants.
Is it 25%? I don't know how to get it.
Sorry?
Is it 25%?
25, you have been given 33.5%.
Yes.
So
If you convert
33.5%. Yeah, that one is the same as what? A third. If you do that simplification, you come up to what? A third. So this is the margin. This is margin. And therefore, from financial reporting, when we talk about margin, meaning we have added, it is more than 100. It is more than 100. So what you do, to come back at cost, which is at 100%, you need to deduct. Are we together?
Yes.
Given the margin, and we know margin is more than 100. So to come back to 100%, you deduct. How? This is margin, so markup will be equal to 1 out of 3 minus the numerator from the denominator. So at any point, when you are given R over N, margin, given this is markup, for example, again, that's markup. And markup, it is at 100%. It is at 100%, meaning this proportion, it is at 100%. To get margin, you need to add some profit. So that means margin will be equal to R divided by N plus R. That is how I was taught. So moving from markup to margin, you add numerator to the denominator. But moving from margin to markup, you deduct in the reverse. So our markup here is 50%. So add 50% on total cost, that is your desired profit markup. Edwin and the company together?
Yes.
Yes, that's our sum. So that is how you are to do that particular question and get the selling price and get the selling price. So do that.
Mm, 39.
Are you done?
Yes.
Okay, so that is it. I think those 2 questions that we have done, they are enough. Can we do 1 question more so that we can do away with that topic?
With the topic or with the learning?
Sorry?
The learning. Back na ile industrial.
Oh, industrial engineering, eh? That one is just explanation. There's no computations at all.
Oh.
Yeah, that is just explanation. So allow me to look at this wonderful question, which is December 2021. There is another one there, December 2021, question number 2. Try to peruse. Once you are there, you signal me.
Question number? Mwalimu.
Yes.
Question number?
Question number 2B.
2B. Okay.
This
Think Edwin has left. Number 2B, okay. Hizo ameweka mpaka corporate tax, eh?
Sorry?
Sema hii hapo ameweka mpaka nini? Corporate tax. Okay.
How does it read? A plastic modeling company.
Basi ni pana.
Right.
Question number 2A.
2B.
This September. Ole. Kuna ingine kwa 2022, 2021 September. I was forgetting. Okay, sorry. Ken Polly.
A plastic Modeling
Yes.
company.
KASNEB Plastic Recyclers Limited. December 2021, yes. About KASNEB.
Is it the one?
The KASNEB, right?
The company, Tumani Supermarket Limited. Try to look at that. December 2021. Question 2B.
Question 2B, December 2021. No. Hii pilot paper au kuna pilot paper?
Oh, yeah. No more sitting. See your pilot paper?
Okay.
No more sitting.
Normal sitting, 20 December 17th. Wow. Question 2B, a plastic modeling, molding.
Go through
Company
that.
setting.
Edwin ameshapotea. Oh, sawa.
Na kwani
Yes.
model paper ilikuwa same na hii? Model paper iko same, almost same.
Which one?
Same model paper.
Or pilot paper?
Model paper iko same thing.
Model.
Eh.
Model.
Yeah, same time. Okay, tuendelee. Tuangalie the model paper iko inaongea kuhusu plastic company.
This is the one that reads a plastic modeling company.
Okay.
So go through it silently so that we can solve it.
Hii imeamua hii imeamua kuleta FM ndani yake.
Hapo ni hapo mambo yamechemka hapo mix
Mix, okay, but iko sawa.
All right.
I think if yes, tutakuwa tuko sawa.
So we need to get the cost starting from material, we add labor and overheads, so that we discount tupate NPV. Tunajua unasema out of the NPV is present value of cash inflows minus present value of cash outflows.
Yes.
So at that point in time, we need to aggregate the direct material, direct labor, fixed overheads, we discount, we bring them today, and then we deduct the initial capital outlay, which is 1.6 million. You see there?
Yeah.
Right. So our work is to calculate the labor cost. Let us calculate the labor cost. So in this case, first of all, let us have the total time model, which is ax raised to b plus 1. That. Then learning the learning index b, learning index, logarithm of learning rate divided by logarithm of 2. log R divided by log 2. We say this one is the same as what? The improvement rate. So what will be the learning index there? So we have log, wametuambia tutumie point what? 0.9. 0.9 divided by log 2. So that one gives us negative
0.152.
0.152.
2, yeah, negative.
Negative. Convert it to positive so that you add b plus 1.
Zero point 848.
Coming to
0.848.
0.848. Right.
8 years.
So that is there. Agree. So that means our total time model will be AX raised to 0.848. So you have that particular model. After that, we need now to get the years. The contract is for 3 years. So you can have year 1, 2, 3. Is my board visible? Yes, you can see.
Yeah, it's visible.
1, 2, 3. Then I need to get what? The time or hours. So we have time.
Hours to produce, but they are going to produce about 5,000 chairs, huh?
Yes.
For the first.
The output is 5,000 chairs.
Yes. For the first year.
To produce the first chair, let us use the model here. So that means
Yes.
in year 1, what is the first chair? First chair will take how many hours?
10 hours.
10 hours. Perfect.
Yes.
So 10, I am using that model, 10 into 5,000, I raised to 0.848.
That is 13,700.
13,700
Yes.
hours.
Yes.
Okay, that is the column of hours. Then I will come to cumulative. Let me have cumulative.
Now they are saying
uh-huh.
that the equilibrium, assume the number 4, assume that an equilibrium of labor hours in the first year will be available in both year 2 and year 3. So it's with them same number of hours, right? Yeah. Yeah.
Yeah, that is there. Where the learning curve stabilizes. So it will be the same equilibrium. Then we come to cumulative time. Let us have the cumulative time. So the first one I have 13,700 cumulatively it will be.
Oh, okay.
The number of chairs, the file.
Cumulative time. Okay. Now just go with the format.
13,700 plus 13,700
is 27,400.
So there we have 27,400 cumulatively again.
Probably that 41,100.
41,100. Good. Now, Nelson, what was the production level in the first year? In terms of
Production level.
chairs,
We produce 5,000 seats.
So first year, year 1, or you can say year 1, there was 5,000 chairs. What about the chairs in year 2? That is now where we use what? The cumulative time. That was the concept that was being tested there. So cumulative time in the second year, the cumulative time is what? Is 27,400.
Yes.
So I use the model. Here, which is now let me have year 2. Here 2. Y equals to A x raised to B plus 1, which is, we can say it is what? It is a raised to 0.848. Together?
Yes. Uh-huh.
Or
Oh, yeah, now I get it. I get where we're heading.
you get where I'm heading?
Yes.
Who told
Is
you?
to find x, right?
You know where I'm heading?
Find
Alright.
x.
So I'm calculating the number of shares in the second year, given that the first year we have produced 5,000 shares. What about the second year? What would be the number of shares in the second year? We use this link versus the cumulative in the second year. So total time cumulative in the second year, I'm just here, I substitute with 27,400 equals to A. I know that is the time taken to produce the first share, which was 5,000 or 10, sorry, 10%,
10 hours.
10 hours, into number of units in the second year, which is unknown, raised to 0.848. Sasa tuone maajabu. Calculate the number of units, which is unknown. I was told you divide both sides by 10 by 10. So here it will be 27,400 divided by 10, which will be equal to A raised to 0.848. So this is 2,740, which will be equal to A raised to 0.848.
Mm-hmm.
Nelson, are you there?
Yes.
Are you there?
Yes, I'm there.
What do we do here now to get the number of units?
We get the 0.4. We what? How do you got to call that root?
The root, eh?
Yes.
Yes, here we conduct the root. So here I'll say x will be equal to 0.848.
Yes.
Am I right?
Yes.
That one
Which is 11,322.
inakuja ngapi?
11,322.
11,000 shares,
122. 322.
322 shares.
Yeah.
And then my good people, remember these are cumulative. So to get the exact in that particular year, what do? You remove
500. 5,000.
5,000, yes. So that you can get the exact production in year 2. So therefore it will be 11,322 minus 5K, giving us what? 6 something?
6322.
6322 is 6322 shares. The same case now, you apply the same content in year 3. Allow me to give you time to calculate for year 3 now, if you tell me that you have seen now. So in year 3, we have that end result of the shares, 6,942 shares. Now, let us prepare our cost statement. Our cost statement, at the same time, we discount.
Hello.
Cost statement. We have year 1, we have year 2, And also you have here 3. When summarize our figures in 2000, no harm. So the first year we start with the material cost. Material cost. How many shares in the first year? 5,000. Per share, cost per share, 300. That one comes to 1.5. Next one. $1.5, so here I can have
1.5, yes.
1.5, how much money can do 1,500?
1,500.
Because we said we summarize into thousands. Year 2. Year 2,
No.
the material cost.
The selling price is, okay, sawa. Haya, endelee.
Year 2, the shares that we had there is 63.22. So here I have 63 shares. 63.22 per share in 300. You have not been told whether the material cost varies. So that is right. This is 1896,600.
Yes.
1896.6. Year 3, material cost in year 3.
It is 2082,600.
Okay.
2082,600.
20, yes, you are right. 2082.6. Yeah, that is material cost. Labor cost. Come to labor cost. Labor cost, what was our labor hours? Which one?
700, 200.
They were constant all through. I believe so.
It was the same.
We computed to be
No, Lizat nafanya 13,700 times 200.
what was the labor hours?
13,700.
13.
Yes.
13,700 times. Here we have labor cost per hour 200 for.
200.
So that
Is
one will
two,
be all through.
yeah.
2740.
740.
2740. All through 2740. 2740. Let us bring another cost from our cost statement, that is fixed
Overheads.
overheads, which are fixed. So we have fixed cost or overheads, whichever, fixed overheads. We are
50 all through.
per year 1250 to 1.25.
Yes.
Good. So this one is we can now get the aggregate of what? Of the cost.
5490.
Hello, Edwin. Nelson, look at dot number,
Yes.
look at dot number 6. All cash flows occur at the end of the year, while the initial investment is incurred at the start of year 1. Then there you can see there was depreciation. 7.
Depreciation.
7. The capital investment has a real salvage value at the end of the contract period. So that's where we need to calculate the depreciation.
Yes, but tutafanya nini? Tutafanya after revenue.
Or depreciation, but it is part of the costs.
Oh, okay.
It's part of the cost.
Cost. Okay. So, but sasa for the flow, mimi hata nimalize tu the flow, alafu sasa niongeze depreciation.
Sorry?
Ili ni maintain cleanliness and flow, I will just do the summation. Kwa nimeanza summation, then I add depreciation to it.
You add depreciation.
Yes, for my end.
Okay. What if we calculate depreciation, we add it to be part and parcel of these costs?
Yes, I'm saying I'm adding it after. Nilikuwa nishaandika line nikaandika answer.
Okay, so to get back the depreciation.
Yeah.
So depreciation we have been told it has a real salvage value. So this is 1. What is the capital investment? 1.6. So 1.6.
Meaning is correct.
Hello? Minus 0.
No, yes.
3.
Divided by 3.
That is how we get the depreciation using the straight line method.
Yeah.
What is that depreciation per annum? Five, three. The same here. Okay. So I think that is we can add that then. Now we get the total cost. This is supposed to be, we summarize figures, this point. Is it point? This depreciation.
Yes.
533.33.
3.33.
Here, I had an oversight. So that one, that I get 1500 plus 2740. 50. I'm having the first one receipt 023.33. Confirm.
Yes.
No.
Yes.
All right. Here too.
6419.
54.
6419. 64.
Good. Here 3.
6605.
5, 6.
6605.
6605. So those are the aggregated costs. So you can come here and have the revenue. So that is, we can even say we are here 1, 2, 3. We'll have to go now. Revenue. We less the cost. We get the net cash flow.
In cash flow or cash flow?
Sorry?
Cash flow or net cash flow?
After
Net cash flow.
after deducting these costs.
It becomes cash flow, yeah, net, yeah. So.
200 cars basi. What will be the revenue we are going to fetch in the first year? First year we are selling 5,000 shares.
Yes.
At per share 900, not number 5.
500 times 900
Are you following?
is 40. Yeah, that is 44.5. But 500.
4.5.
Yeah.
Less the costs. 60, 23.
Yes. But your number 6, nasema all cash flows occur at the end of the end or at the so meaning that the initial capital will be under 0 year zero.
Sorry?
Number 6.
Yes.
Item number 6. Additional information number 6.
All cash flows occur at the end of the year. At the year end, while the initial investment, the initial investment is just at the beginning of the year 0. Year not.
Okay, so.
So what is the net cash flow there in the first year?
Go to mwalimu hatujatumia tax. Hii iko na tax sawa. Sawa.
Ulikuwa na tax
No, ilikuwa kwa ile pepa nyingine kwa nimeangalia. Ile saa zile nikitafuta.
kwani kuna pepa mbili?
Nasema kuna zile maswali nilikuwa napitia zile before.
Yeah.
Ilikuwa nasema kuhusu tax.
Oh, so but this one doesn't.
451 minus 62.
So that calculation.
Having a negative,
A negative of 1523.
Yes.
Second year. What was the shares? Number of shares?
Revenues is 5689.8.
How many shares were there?
6322.
It's 900.
Yes.
Point 8. Remember, our figures are summarized in total. Cost in number 2, cost in year 2, cost in year 2. Total is 64. 19 can even do that. So you will deduct.
Na mbona tumia what rate depreciation natuna nini?
Sorry?
Hatuna tax element depreciation.
Depreciation.
Yeah, we don't have tax element to it. So why are we using it?
It is part and parcel of the cost in that particular, because those are we were told in what, in number what, not number 7.
Then, yes,
The capital investment has a nil salvage value at the end of the contract period, meaning we must depreciate. These shares are being, not shares, but the capital investment.
the machine.
You have to subject to depreciation or amortization, in other words.
Okay, because naona kwa ile tukifanya FM, we are adding inflation, then later we're going to subtract inflation for us to get the cash flow. So for this case, if you don't
adding depreciation.
yes, because once we do the costs minus depreciation, then we tax, and we bring it back again for the cash flows.
Oh, that is what we call depreciation tax.
Yes, that's what I'm asking. While using depreciation here, and pesa pia hatuendi kuitoa mahali, hiyo cost ya depreciation is a superficial cost.
So next one.
Yes.
It's for because we don't have the tax that we are being subjected, so that we can get the DTS, different tax shield.
Yes.
We just only account for depreciation of that particular capital investment.
Okay. So we proceed then. So
get that concept clear. Then what is the net cash flow then?
Year 2 is negative 79.53.
What is the net cash flow? Is negative what? Negative
729.
729.
So year 2.
For year 2, 729.
Yes.
Negative, remember we are going to discount. Then here, last one, year 3. What was the number of chairs?
Number of shares ilikuwa 6942.
6942 times 900. Point 8. Then we have the net, the costs. Costs are 6605.
Minus 357.58.
Negative
357.
357.
Yeah.
So try to discount. We add them and then we less the initial cost. Discount at the rate of
12%.
12. At the rate of 12%. Now discount, bring them today, then you add them, you less the initial cost, which all of them will be negative, but that project is not viable. I believe you have seen the concept, eh?
Yeah.
All right.
Selling price.
Even if it's a negative NPV, should we negotiate for the selling price so that we can venture into the market for this particular plastic chairs?
Yeah. First, they look into the pricing, eh? Si hapo ndio kuna pesa.
Yes.
Sema the pricing.
In practice, should we do?
They should check on the before coming up with the margin. Your margin selling price. Wangeangalia if the markup was okay. They could have done the costing first.
Costing overheads. Yeah, the costing, eh?
Yes, costing.
And they try to use even the cheaper materials, but without compromising the quality.
Yes, okay. Yeah.
Isn't it?
Yes.
They can look for materials less than 300, eh? That will make you 250, but you maintain the quality. What about the labor force? They are paying 200 per hour.
They look for efficient labor.
That is also another avenues. Are fixed overheads? These ones, I believe they are constant. You cannot do anything to that.
Yes.
So those are the other factors. Perfect. So we are done with that particular question. Allow me to look at something here, which I'm going to say it is factors affecting learning curve. Factors affecting learning curve. Commonly tested. Factors affecting learning curve. What are the factors that can affect the learning improvement or the improvement rate? Poor working condition, right?
Yes.
That is the first one, poor working condition. It will affect the learning ability. Next one you can have there is holidays. Holidays, sometimes we break for all day, 1 month, 2 months. When you come back to the office, you try to forget some ideas, some aspects, isn't it?
Yes.
Yeah, that one is also another factor.
Machine breakdown.
Machine breakdown, yes. Machine breakdown. They will learn or they will lead employees to idle, being idle as they wait for the machine to be in the good condition. High employee turnover. Look at that. High employee turnover. Will affect.
Yes.
High employee turnover. Working for a certain company for 1 month, you leave. You go to another one, you shifts. So you don't have the constant place that you learn. You are being shifted or retrenched, isn't it?
Yes.
Yes, that one will happen. Then, and lastly, you can have what? Individual personality. Individual personality. We have different. Me and you, we are not the same. We have high class, middle, and lower. Fast learners, medium, and slow learners. So that one also will affect. That one will affect the learning capability. Together?
Yes.
All right. So those are the factors that you can be asked to enumerate. Applications of learning curve. Lastly, applications of learning curve. Applications of learning curve. Number one, we can have setting realistic standards. Setting realistic standards. Setting realistic standards. So that means when you want to set the standards, you don't set standards based on idea that these employees are in a position that they are not going to have confidence and gain experience in their particular job. So that means you must give them time. You must give them time to learn so that you can set the standards. So when they are saying when an employee is new in a job, which is repetitive in nature, standards or expectations should not be too high, because these employees are new in the job. So you must give them room to learn. Together?
Yes.
Number next there, you can see it is product pricing for competitive bidding. Product pricing for competitive bidding. We know that the one who wins the bid is the one who gives the what? The lowest price. So in that case, you must figure out the costs from past experience, so that because you have been in the business, you have the concept. So you are not going to quote the highest bid price. You must be able to list the lowest bid price based on experience and confidence. If the job is manual and routine in nature, the firm may submit a realistic bid price based on the latest job experience. Good. Another one we can have there. Last one is inventory valuation. That's another application of learning curve. Inventory valuation. When we want to value inventory, we value inventory based on direct material, direct labor, and overheads. So my concept there is under labor. That is where we must embrace the effect of learning effect, so that we can give what? We can give the correct labor cost. Getting that, Nelson?
Yes.
That's from our computations, we were computing the total labor cost. You must be in a position to embrace the correct labor cost, which will again affect the overheads, because value overheads, they vary with what? Labor hours. So that is under inventory valuation, and many more. Assumptions of learning curve. Assumptions of learning curve. Last but not least, as we end class for today, assumptions of learning curve. One, we can say it stabilizes after some time. You remember how we were drawing that learning curve? It was decreasing like that, but it will reach a point where it will be parallel. Now you are a veteran, you are taking constant time in that particular job. But before you become a veteran, you will be decreasing time as you gain experience. Another one is production has to be manual. I can see that another classes are coming up. Let us finish. Production has to be manual. Then another one is production has to be done. Production has to be done by the same individual. Or group. Production has to be done by the same individual or group. Production has to be done by the same individual or group. Lastly, production has to be repetitive. I.e., a single homogeneous product will be produced throughout. A single homogeneous product will be produced throughout. Good. Up to that juncture, thanks for your time. Allow me to end the meeting, and thanks for your time until we meet in the next class.
So thanks.
All right. Have a great evening.
You too.